Hello viewers, welcome to my channel. Today we are going to see one more sum of September 2024 4A retirement of partnership firm. They have given XYZ where in a firm sharing profits and loss in the ratio of 3:2:1 and the balance sheet is given. Okay. Now coming to the adjustments, they have given goodwill of the firm was valued at 60,000. Value of patents to be reduced 20%, machinery to 90%, provision for doubtful debts to be raised to 10%, liability on account of provident fund only 6,000, and liability of workmen compensation 6,000 is to be created. Z took over the investment at market value. Amount of Z is to be the retiring partner to be settled 50% on retirement. We have to make payment 50% within 1 year. So this will go into his loan account and the balance will be as a bill of exchange payable at 3 months without any interest. They have asked you first to show the entries for the treatment of goodwill and prepare revaluation account, partner account and the balance sheet. So just for saving the time, I have already written everything so that I'll be able to explain you. First thing they have asked you to give the calculation of goodwill. So we are going to write the calculation of goodwill. Goodwill of the firm. Anytime goodwill of the firm is given, we have to find out the share of that person who is either on admission or on retirement. The person who is leaving the firm. So here Z is leaving the firm. So Z's share of goodwill is their partnership is in the profit sharing ratio is 3:2:1. So Z will be 1/6. So goodwill of the firm is 60,000. Z's share of goodwill will be 10,000. This will be always borne by the gaining partners. Here they have not given you any other ratios except the old profit sharing ratio. Under such circumstances, you should take whatever the ratio left out after this retirement. This will be your gaining ratio and the new profit sharing ratio. Okay. So here the gaining ratio is 3:2. So both the partners X and Y, they are gaining in the ratio of 3:2. So they have to bear the goodwill to be paid to the leaving partner, retiring partner in the ratio of 3:2. So this 10,000 is to be borne, B-O-R-N-E, borne by X and Y in the ratio of 3:2. So I gave you the journal entry. Excess capital account will be debited. That is 10,000 into 3/5/6,000. And Y's capital account will be debited for 4,000. And to Z's capital account, 10,000 will be given to that person. And see, in this question, there is one existing goodwill. This is appearing on the asset side. So this goodwill also to be closed. So whenever existing goodwill is written off, goodwill is having an debit balance because it is appearing on the asset side. All of you know whatever the assets that will have a debit balance. In order to close this, in order to write off this, you have to take it to credit side. Then only this account will become zero. Okay. So what we have to do? We have to credit the goodwill, then ultimately we have to debit the partner's capital account. Here in the existing goodwill, all partners' capital account in old profit sharing ratio we have to debit. So that the goodwill get credited and it will be written off. Excess capital account debit, Y's capital account in the ratio of 3:2. Here I have shown you the calculation. 12,000 into 3/6. This will be 6,000 for X, and 2/6 will be 4,000 and 1/6 will be 2,000. So both the goodwill is now settled. First point they have asked you to show the entries for the treatment of goodwill. So this goodwill, first goodwill will go to, both will go to your partner's capital account. So I have written in the partner's capital account. First, always you should write the balance brought down. I brought it down from the balance sheet. This is capital 78,000, 42,000 and 31,000. So the first line will always be the balance brought it down 78, 42 and 31,000. Now the goodwill to be given to Z will be 6,000 and 4,000. By X capital it will be 6,000, Y's capital it will be 4,000. And these people's capital account will get debited 6,000 and 4,000. For the existing goodwill, return of goodwill is credited, partners capital account is debited in their old profit sharing ratio. So I have written to goodwill 6,000, 4,000, 2,000. As far as goodwill is concerned, we have given the calculation working. They have asked you to give you the entries of goodwill. So we have given the calculation as well as we have made the entries in the partner's capital account. Next one, we are coming to this. We will be coming to investment fluctuation fund. There is nothing told about investment fluctuation fund. So this fluctuation fund will be credited to partners capital account. This is out of profit they have saved this amount. Investment fluctuation fund. So investment fluctuation fund will be credited to partners capital account in their old profit sharing ratio. That was 6,000. So 3,000, 2,000, 1,000. Hope you understand this. So coming to the next point, workman's compensation fund. They have told something about workman compensation fund. Liability for workman compensation to the extent of 6,000 is to be created. It is nothing but they expect some claim of 6,000 rupees. Though they have provided for 12,000, but only the liability, the claim may be for 6,000. So what we have to do? We have to only create 6,000 rupees and the balance 6,000 will be distributed among the partners. See here I have distributed the 6,000 rupees in their old profit sharing ratio. As well as we have to come to balance sheet and we have to write the workman compensation fund 6,000 rupees because this is a claim expected. So I have written the claim. Okay. Now coming to the next item, you have to go item wise. Next one is trade creditors. They have told nothing about the trade creditors. So this will go to the current balance sheet as 31,000 creditors. I have taken it to balance sheet. Hope you are understanding it. Next one, employees provident fund. They have created a liability provision for 12,000 rupees. Now they say that liability on account of provident fund will be only 6,000. So the liability is coming down. So it is a benefit. It is a gain for the partners. This will go to revaluation account on the credit side. So I have taken it to the credit side of revaluation account. Employee provident fund 6,000. The balance is 6,000 will be appearing in your balance sheet. Employee provident fund. So I have explained creditors, there is no change. Employee provident fund has come down. The liability has come down to 6,000 rupees. Only there is a liability of 6,000 rupees. So the extra provision has gone to revaluation account. In case of workman compensation, it was 12,000. Only 6,000 the claim is expected. Balance 6,000 we have distributed among the partners. Okay. So now moving on to the asset side. Goodwill we have already written off. Now patent, about patent they say that value of patent to be reduced by. See here, whenever you get a word by means you have to just take it 20%. If you are not getting the word by, then you should always take the difference. So keep it in your mind. So the patent to be reduced by 20%. So I am taking the patent into my balance sheet first, reducing it by 20%, 6,000. So this revaluation will go to, due to revaluation, we are reducing the value of the asset. So this will go to the debit side of revaluation. Whenever an asset is decreasing, revaluation account is debited. All of you must be knowing it. Now coming to machinery account, you should not make any mistake while reading it. And that of machinery too, when they say 2 means only take the difference. 90% you have to keep it. Take the 10% difference. So 100% is given in your balance sheet. So they say that it should be to 90%. So 10% is reduction. The difference whether increase or decrease you should see. If there is a word buy, simply take that amount. If there is no buy, then take the difference. See the difference is decreasing or increasing. Here it is 90% means 10% is decreasing. So take it to the revaluation account 10% and go to your balance sheet and make it. At a time you have to make all these entries. Just to save the time, I have already written, because it will be taking much more time, then you will not be able to view the video fully. So in order to save the time, I have already made. So you have to take it that balance sheet as well as your revaluation account. Now coming to provision for doubtful debts to be raised to, the word is again to 10%. So whatever already there, you have to see whether there is an increase or decrease. 50,000 into 10% will be 5,000. Already we have provided for 4,000. Only you have to make provision for 1,000. Please don't make any provision on this 46,000. Simply make the provision on 50,000 and see whether any amount is already provided. Take the difference. The difference is increase in provision. Provision is again a liability. Liability increase means revaluation debit. So bring it to the debit side. So this is over. Now moving on to the next item. Investment market value 27,600, 25,000. See here they have told that is that took over the investment at market value. The partner has taken the investment at the market value. But what is the value of book value? It is 25,000. Whereas Z is taking for 27,600. So there is a increase in the asset of 2,600. So this will go to the revaluation credit. So I have taken it to the revaluation credit side. Why investment taken by Z at a higher value 2,600. Okay. Now moving on to the next one, stock. There is no change. So investment is over because this is taken by the partner. You have to go to partners capital account and debit that is that. Immediately you go to partner and debit partner by 27,600. Hope you are following it. And now stock, there is no change. Just I am taking it to balance sheet. 30,650. Already 50,000 provision has gone to 5,000. 45,000 is the remaining. Cash in hand we will complete it last. So we have done all the asset side. Hope you are understanding everything. This capital account has gone to the partners capital account. Investment fluctuation fund, nothing is said. So this is distributed among the partners. Workman compensation, they say that only 6,000 claim is expected. So keep that claim in your liability. Balance 6,000 distribute among the partners. Trade creditors, you have to make the payment. So take it to balance sheet. Provident fund, they say that the liability has come down by 6,000. So there is a gain on this. So this will go to your revaluation account. Again explaining goodwill, we have already written off. So all the partners capital account will be debited with this. Patents, it is 10% reduction. So it will go to revaluation account as well as in balance sheet, you have to write the decreased value. Machinery account, there is a, they say that you take it to 90%. So it means there is a reduction of 10%. That will go to your revaluation debit, and the balancing figure 54,000 will appear in your balance sheet. Investment market value, this is taken over by the retired partner at the rate of 27,600. But whereas the book value is 25,000. So there is a gain of 2,600 will automatically go to your revaluation account. And is that account has to be debited. Side by side, you should do that. Otherwise, you will be in trouble because the balances may not match. You may forget that item. So when you take the 2,600 to revaluation account, same time go to the partner's capital account, debit is its capital account with 27,600. Stocks, there is no change, so take it to your balance sheet. Debtors, provision for doubtful debts has increased to 5,000. So already provision is there for 4,000. So you have to take only 1,000 to your revaluation debit and go to your balance sheet. 50,000 minus 5,000 will be 45,000. Cash at bank, we will close it at the end after making payment to, is that, see here, this one we have done, this one we have done, provision for doubtful debts we have done, and liability of provident fund has come down, so we have taken to revaluation account. Workman compensation distributed, this Z has taken the investment market value, we have taken amount to Z is settled as 50% cash payment, 50% in 1 year. So this will go to loan account, and the balance of 50 that will go to bills payable account. So now we can close the revaluation account. So the total of revaluation debit is 13,000, whereas credit is only 8,600. So what we have to do, we have to, there is a loss by revaluation. So we have to debit the partner's capital account and credit revaluation account. So I have debited in the ratio of 3:2:1, this 4,400. So this debit will immediately appear in their capital account. This is goodwill, and this is revaluation loss has come here, and investment that taken over has come here. This I have already explained to you. So now we are going to first close this is that's capital account. So we are making the total 31 plus 10 goodwill 41 and 1,000 workman compensation 42 and 43. The total 43 will be taken this side. What is the balancing figure is 12,667. In this, 50% will be paid, cash or bank. I have written bank, you can write cash. Okay, because in the balance sheet it is cash at bank only. Okay. So you have to write it as bank. 50% of this is 6,333. Balance 6,334. Of that, 50% will go to loan account, and then remaining, this is 25% loan, 25% bills payable with no interest. So this account is closed. So we can come to the balance sheet. Here I have written cash in hand. Sorry, this should be cash at bank. Okay, so this should be cash at the bank. Take it as cash at bank. We have paid 50% of 12,667 is 50% of 12,667, 6,333. I have taken it in the rounding off. So balance left out is 2017. So now moving on to this side. So bills payable will be 3167 and Z's loan will be 3167. Now let us close the partners X and Y's capital account. We have closed only this thing. Now Excess capital account 78 plus 6, 84,000 we have carried here, and 6,000 goodwill, and this 6,000 is the existing goodwill and revaluation loss. After that, his balance carried down is 69,800. That has gone to your balance sheet. Same way, I have closed the wise capital account 46,000 carried here, goodwill to Z and goodwill written off, and then loss on revaluation. Then the balance comes to 36,533. So the total capital is 1,06,333. Loan account has gone, bill payable has gone, creditors there was no change, and employee provident fund the liability has come down to 6,000. Workman compensation claim will be to be created only 6,000. So the total matches as 1,55,667 on both sides. Hope it's very clear to you. Still you have any doubts, please don't hesitate to leave it in your comment box. And if you have not subscribed to my channel, please do subscribe my channel and share it with your friends whosoever interested in these type of videos. Thank you for watching.